Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and Good Vibes Camel is back today. So from time to time, I need to be business Camel, and I take this tough love approach as per yesterday's video. What was really nice to see is that enough of you have spent enough time around me now to understand that it comes from a place of love and compassion. There's always going to be some people that roll their eyes and go, Camel's on, he's on one again, he's on one, and that's fine. If you can't deal with business Camel, I completely understand, but it was really nice and refreshing to see that most of you understand it comes from a place of love and compassion. And it was also very nice to see that it was actually worth it, because a bunch of people reached out to me and said, I actually really needed to hear that pertaining to the recession bit at the end, or whatever it was. So it's worth it for me if at least one or two people can just rethink their stance or ask themselves some questions or be forced to do a little bit of introspective work, since that is the name of the game in trading. And as I was saying yesterday in the cycles video, often we go right, and then left, translated. And apparently this works with my personality as well. You get 4 nice videos followed by a long and angry one. So again, these cycles are everywhere. Hopping into today, okay, I wanted to play you this clip. Do you remember this clip? I'm sure you probably do.
If things are going so great though, then why is it the White House officials are trying to redefine recession?
No, we're not redefining recession.
If we all understand a recession to be 2 consecutive quarters of negative GDP growth in a row, and then you have White House officials come up here to say, no, that's not what a recession is. It's something else. How is that not redefining recession?
Because that's not the definition.
So yeah, I'm sure you remember this clip. Absolutely wild. This will stick with me forever for sure. But anyway, the reason I bring this up is she's back at it again. Take a look at this.
It tells you everything that we need to know about how desperate Republicans are here. And instead of talking about the president's performance in office, and what I mean by that is his legislative wins, what he's been able to do for the American people across the country, we're seeing these deep fakes, these manipulated videos, and it is, again, done in bad faith.
So there you go. He isn't really falling up and down the stairs, right? He isn't really facing the wrong way during the national anthem or misreading the teleprompter. No, those are deep fakes. We live in end times, man. We really do. Moving into Bitcoin, I found quite a few interesting things I want to point out and some very interesting pieces of data surrounding the traditional finance markets. So take a look at this, right? First of all, halving progress, 4%, meaning we are 4% through this current cycle until the next halving. And take a good look at what happened every other time, right? Good things happened, and good things happened. So does that tell us to keep an open mind about good things happening once more? I think it probably does. And Bitcoin is still growing faster than the internet. So that's not nothing. Not to mention this current round of selling, of consolidation that we've seen in Bitcoin is likely due to minor capitulation. Now, we are currently 34 days into this current spell of minor capitulation, and the average duration of a minor capitulation lasts just 41 days. So are we less than 10 days out now from seeing some kind of relief, some kind of big, strong bounce? I wonder if that's going to align with some cycle lows. We'll get to the charts at the end as always. But remember, what this is essentially is flushing out the less efficient miners, the over-leveraged miners. They're forced to sell to cover their overheads and maybe even to liquidate their mining rigs and their mining farms so that they can go broke and patch whatever debt they owe. And this process forces them to sell the Bitcoin that they've got. They can't afford to hold on to it. during this whole process, remember, we hand hash rate over to the more efficient miners, the ones that are less leveraged, the ones that have cheaper overheads and cheaper running costs. And once this has all been sort of flushed out, right, once we've gotten rid of the less efficient miners and handed that hash over to the more efficient miners, then they will be more than happy to sit there and farm their yield from the block rewards. They will be more than happy to hold some of this Bitcoin for the longer term. And of course, that removes a huge wall of sell pressure, and thus should be enabling Bitcoin to continue its next leg higher. So very interesting, right? We might not be too far away from actually getting that pump. I see Cred is out here saying that he likes this as a scenario. Are we going to get something like this? Okay, back to, what would that be? 64, 65K-ish, before then looking for a nice impulse on the way up. He also says that if we were to roll over into this, which is, let's call it 63.3, down to about 59, 60K-ish. If we were to make it into this neighborhood, that would be what he considers the dream long entry zone. Again, I think we are getting close to finding some lows, close to finding some relief and seeing some upside from Bitcoin. I know it seems long overdue. But remember, in a way, this is what Bitcoin does, right? It chops around sideways, not doing anything, bores everyone to death, and then it puts in a huge pump in just a matter of weeks before then again boring everyone to death once more. We've got some more confluence here because whales with the 10K plus Bitcoin stacks are moving towards accumulation whilst everyone else is still in distribution. So the whales are starting to think, okay, now might be a time to start to distribute less and move more in towards accumulation. So another positive sign under the hood for Bitcoin. And I still see a bunch of comments saying things like, Camel, where's the liquidity going to come from? Well, M2 is back into expansion territory. Okay, so there is going to continue to be these forms of stealth QE. The interesting thing about this is people always confuse this with inflation. So this can provide instantaneous liquidity because they are expanding the supply and that supply can immediately find its way into markets. But this does not present as inflation, typically, for 12 to 18 months at least. And it might not present as inflation at all if it doesn't have the component that's necessary, which is velocity. So this could just be debasement, right? It could enter markets as liquidity, function as debasement, and assuming we do get the velocity component, which pertains to the number of times that money changes hands, then we can talk about seeing a spike in inflation with a lag of around 12 to 18 months' time. But what I'm here to say is, in case you're new or inexperienced with this kind of stuff, okay, don't confuse this with we're now about to see big upticks in the CPI prints and the inflation data, because anything you do to the rate of change shows up in the CPI data with around an 18-month lag. We have still yet to see most of this portion of the M2 rate of change show up in the CPI. So we are likely still going to see disinflation. We are ultimately most probably going to slip into deflation, especially if we get some kind of stock market blow off top, which it seems to be putting in, followed by a big crash. So I still expect deflation. All of this is yet to even be seen and felt in the real world. I still expect that to be seen and felt in the real world. But what's happening right now is we are crossing back into expansion territory, which tells us two things. One, liquidity is possibly here to drive this final blow off top leg higher, especially if this continues to start to explode to the upside like I suspect it might. And it also tells us that 12 to 18 months time, we are going to see at a minimum debasement of currency, and most probably that will result in spikes in inflation. That inflation might take even longer to manifest since the velocity component may well be limited during a recession, particularly if we get the sorts of things I expect to see, like increased violence and potentially even second rounds of lockdown. That may also stem the velocity just like we saw in the C19 era. Remember, inflation would have been 10 times worse than it was if we weren't all locked down and unable to move the money around between each other. So a wild time. For now, though, I don't want to get too focused on that. I just wanted to point out that one, expect continuation of disinflation before ultimately a period of asset price deflation. And two, don't say where's the liquidity going to come from, because it's going to come from somewhere. Whether it's here, right, whether it's another form of stealth QE, doesn't really matter. They're going to find it because they need to pump this thing up to create the exit liquidity for the big players. And another big question, I've been asking myself this, and a bunch of you keep asking me it, is, Camel, are we concerned that the stock market appears to be setting its third and final blow off top angle whilst Bitcoin is still trading sideways? And I have two answers that conflict each other. The first answer is yes, that is somewhat concerning, because if the stock market is really going to do some kind of big parabolic blow off top and a crash, is it reasonable to expect now to be the time Bitcoin decouples? I don't want to bet on that. I would love nothing more for Bitcoin to decouple and start acting like a risk-off asset, but I don't think now is the time to be betting that's what's coming. Instead, I think if the stock market's going to do this, okay, and Bitcoin's going to keep doing this, then by the time we get to the crash portion, we're probably going to see Bitcoin suffer as well. That's my thoughts. Now, it becomes a different conversation once we say, does Bitcoin crash with the stock market initially, and then is it amongst the first and fastest to recover like a commodity is expected to behave, like gold and silver probably will? Or does it suffer the same long, drawn-out, extended bear market that the stock market does? That's another conversation for another day. But on the flip side of all of this, there's another way to interpret it, and that is, we've seen this before, as Cred points out really nicely here. Okay, this is Bitcoin at the top. You can see top to bottom 20% correction, whilst the stock market in that same period of time did a 14% upside pump. Needless to say, what came thereafter was a bit more like this for Bitcoin, and the stock market did something more like this as well. So it's not necessarily the end. We could just be experiencing another period of divergence. We're going to find out soon enough. But remember, typically speaking, the longer the consolidation, the more the compression, okay, the more violent the move when it is revealed. I also found this, okay, people are trying to call tops all over the place. And whilst I think we're not too far away, what you'll notice, if I put some lines in, they look a bit wonky, but you get the idea. It's pretty hard to draw a straight line. At these peaks of peak risk at the bottom, okay, you'll see that we often can make slightly higher highs, but we often kind of top. Right here, we got an extension followed by a big correction. Here, it's just like a little pullback within the context of an uptrend. Same deal here. Okay, here we went on for some time. Here we had a final squeeze. So the question is there a final squeeze left, or is the top coming very soon? I would suggest to everyone that the top is not quite coming just yet. And the reason I say that, and I'm not talking about time, I'm talking about price here. I think we're going a lot higher because people are still really bearish here. They're still coming out with these sorts of things. They're still looking for any excuse to call tops, to short here. I can see it in my comments. People keep asking me, Camel, can you cover Nvidia? When can I short Nvidia? People have been saying that since the price was about 1/3 of what it is today. So until such time as the last bear flips bullish, then I think we are still going to continue to climb a wall of worry. I think we've still got a lot of upside squeeze left in this rally. And whilst I'm not in the camp of people that thinks this goes on for many, many months into the future, I am certainly in the camp of people that thinks we've probably got a good 10, 15, even 20% upside from here in the stock market indexes. It's also true that the hedge funds and the money managers and the institutions are largely offside here, and they have been for a large portion of the way up. So because of that, there's career risk. They're going to be forced to start to throw in the towel and chase this move higher, and that's probably how we're going to get this third angle. So again, calling for higher prices, but also mindful that the top might not be that far away in terms of time. And if we take a look at this ATR model, what you'll notice is when we get this bullish cross, similar to like a MACD crossover or whatever, we tend to see a top come in. It's the same deal here with this. It's the same deal here, as you can see, with the C19 plunge. It was the same deal here with the 2022 bear market. And right now, we are yet to see a cross, telling us there is probably still space for more upside. But we're also, as you can see, just by looking at this bottom section, not too far away probably from seeing a bullish crossover, and those are synonymous with tops. So again, all the while this is not crossed, right? And all the while we continue to move higher, then happy days long and strong. But you tell me, okay, does this speak to many, many, many months of bull market ahead? I'm not convinced it does, personally, as always, open to all possible outcomes, open to being proven wrong by the market. But there's a pretty interesting thing that Kemazabi tagged me in here, which is nearly a quarter of all 1 month peaks for the NASDAQ 100 happened in July. That's twice as many as any other month. I've said this before when we were back in May. People kept saying, yeah, well, sell in May, go away. No way we're going higher because sell in May, go away. And the truth is, if you just pull up an S&P 500 chart or a NASDAQ chart, you'll see over the past 10 years, that was almost never the strategy, right? I think that worked something like 2 times out of 10, 3 at the absolute most. I'm pretty sure it's 2 out of 10 was the correct time and the correct posture to sell in May. The other 8, you should have been long. And what I said at the time was the alpha is actually sell in July. And here we are with a bit of data for you, rather than having to take my word or pull up your own chart. You can see right here, okay? Sell in July is more of an advantage than sell in May. So something to keep in mind. We should at least be open to seeing a 1 month peak, okay? Something else I haven't covered in a while, but have been keeping an eye on are the high yield credit spreads. And you can see at the hard right edge down here, we are compressing. We are compressing, but for the first time in a while, instead of a downtrend, okay, if I grab hold of this, wait, I've got to turn my tool off, and zoom in a little bit, what do you see here? This is starting to bottom out and go sideways. It might arguably even be thinking about turning up. So that's pretty interesting to me, okay? Now, it doesn't mean we can't roll over again and continue lower down, but I have been saying very, very consistently every time I cover this, that this compression will precede an expansion. And if that's coming in the not too distant future, perhaps something like this, okay, and a breakout, what does that imply? It implies financially stressed conditions, just like we saw back here in the C19 era. So I will continue to monitor this. I'll continue to update this. I haven't covered it in a little while simply because, as you can see, it's just been down, down, down. And then in here, it's just been chilling out. But like I said, of late, we are now starting to hold support at the bottom. We are now starting to trade sideways and thus are potentially gearing up for a little bit more compression before a violent breakout to the upside. And again, those violent breakouts synonymous with financially stressed conditions. So it's one more piece of data in my favor to say the end is not too far away in terms of time. Again, I think we go much, much, much higher. Whenever I say this, people say things like, oh, you're so bearish. No, I'm not bearish. I'm calling for a blow off top, which is the most ridiculous thing ever, right? I'm calling for multiple years of average S&P and NASDAQ gains to be made in just months. I'm as bullish gets. But typically what happens when you get something like that, especially against a backdrop of something like this, okay, is a spectacular downside violation. So bullish short to medium term, quite bearish longer term. Of course, we're going to keep tracking rates. We're going to keep saying tell that to the bond market. And this is one of the reasons. Canada cuts rates, okay, bankruptcies, not doing too well. What about in France? Okay, remember the ECB cut rates just recently, and France is not doing well either. It's down 6% in a single session. Euro Stoxx 50, yeah, again, rate cuts are bullish, right? No, not necessarily. Also notice the FTSE 100, okay? Is that all the third angle was? Is that all we had? Now, if it breaks down from this second angle, again, we might have some issues here. We may well have some issues. We also might have some issues for the DAX, as you can see here, okay? This also might be some issues that we're undergoing. And arguably, if we were stricter with this line, then what have we got? Breakdown, retest, resumption. So that's the DAX, okay? Remember, markets historically top unless they are cuts into normalization within the first couple of cuts. And markets can top before, and then the Fed can react, right? So we can have a big blow off top like this, a breakdown, and then in here, the Fed can go, whoa, 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 we need to cut rates, right? But by then it's too late. It's already too late. Found the France 40, okay? This is the last point of support. If it doesn't hold here, right? If it does, fine, it has held. And then we can look for a third angle for France. But if this turns into breakdown, retest, resumption, okay, then what do you think is going on here? So now would be the final time to hold, not just because it's a second angle touch, but also because it's a back test of this horizontal here, right? So this is important for France to hold. But again, because the ECB has started to cut rates, it's only really reasonable to expect best case scenario, something like this. So again, the writing is on the wall, going to keep an eye on the bond market because that will tell us when the Fed is going to cut. Speaking of the bond market, still lower lows and lower highs for the 10-year yield. Of course, some level of counter trend bounce is to be expected. What about the 2-year? Back above that critical support, okay? But again, still making lower highs all the way and now lower lows. So one more rollover from here, something like this, another lower high and a rollover. And again, it tells us that the Fed's going to have to cut, right? It tells us the bond market doesn't believe it. Again, I say tell that to the bond market. It's a wild time to be alive. Take a look at the Dixie as well, slurping up all the other currencies. Again, going to continue unless they start to cut rates. Even then, probably going to still continue to be a deflationary bust scenario and a dollar milkshake playing out. We'll do gold really quickly since there's not much to say, right? This is due a rollover into a weekly cycle. Down here, we're looking to get back to full exposure. Oil's pretty interesting. I think it's found a weekly cycle. And remember all in here, I was saying it's got to run some stops. I think that's what we're seeing now, right? I think we've seen the trap. I think we're now going to run everyone's stop and then it's time to go. So might get a second chance at that, but not anytime soon. I want to give this plenty of weeks to left translate as a weekly cycle. So probably going to want something in the neighborhood of at least 4 or 5 weeks to see a left translation, and then we'll be looking for this. Bitcoin hanging in there, right? And we got 2 counts running because if that is the low from back there, the ultimate low, then we move into the timing window as of June 24th. So next week we enter the timing window if you're the type of person that thinks that's the cycle low. I'm not sure which one of these I like, but I was saying to members I'm going to be on guard for both of these scenarios, which means 1, that next week we're in the timing window, and 2, if we don't see any kind of swing and a reversal in that neighborhood, then I will be forced to accept the current count that I've got, which tells us that probably another week or so beyond next week till we're in that timing window to see a 60-day cycle low. Either way, it's pretty much do or die time, right? We're going to find this cycle low hopefully in the next couple of sessions. I say couple of sessions, let's say a couple of weeks. And then if we don't see third and final angle, and particularly if we don't see it against the backdrop of the stock market, then I think we've got to entertain something is wrong under the hood. But for now, find that cycle low and it should be bananas time. And the reason I say that with such confidence is take a look at the stock market, okay? That looks like third and final angle stuff to me. It really does. I also think that this is an early cycle low. You can see this here in the NASDAQ even stronger, right? Look at the NASDAQ. That does not look like normal price action at the moment, does it? That looks like a blow off top. The Dow also probably going to give a breakout signal today, meaning if you're not in already, there is possibly an opportunity to get long on a breakout like this with a stop below this low or that low if you want to give it some space, targeting way, way, way higher up. But all of this stuff to me speaks to blow off top, right? We've also got the Russell 2K hanging on to its critical range break. If this can start to push, then it really is go time, right? And again, people lie, the data lies, but charts don't lie. That is indeed, for now, until broken down, a third and final angle. From a cycle perspective, maybe we got to wear some people out for a couple more weeks, like I said, for Bitcoin. But I think it's about time. I really do think it's about time. I wonder if, as well, this would be absolutely beautiful from a 3 waves, a 3 trend line setup. If we were to get a touch of this support and then set a third angle, that would be absolutely textbook and beautiful. We would love to see that. I think it would also make dealing with it quite a lot easier. But for now, at least, okay, things are going according to plan, right? The melt up is still very much intact. I bet if we flick onto this chart, it's starting to look an awful lot more like it's actually in play, right? I mean, look at that. That's the best it's ever looked, if I'm being honest. And I don't really think we can argue about that. That is the best it's ever looked for this whole blow off top idea. And all it will really take now is a good couple of weeks of insane squeeze and a breakdown. And I mean, you tell me, are you comfortable with that? Are you comfortable holding through that? I'm not personally. I think I'll be exiting on this third trendline breakdown. If we then continue to hold up here, there'll be a re-entry with a nice tight stop somewhere out of a daily cycle low or weekly cycle low for confluence. But I don't know, man. I think the writing's on the wall. I think this is looking more and more like this call is correct. More and more and more like this call is correct. And even though many people still don't want to hear that the top might just be weeks away, well, if we were to get up to, let's say, 6,800 for the S&P, that puts us at the end of August, following this trend line. So you really needed to break down, and you really needed to break down immediately if you don't want to have to entertain a July, August top time frame. So again, one day at a time, right? But a wild time to be alive. Feels good to be back. Feels good to be good vibes, Camel. But also feels good to know that you spent enough time around me to start to understand that sometimes we got to be business Camel. Some of you call it Uncle Camel. And lately, some of you have been calling it Cracky Camel, which I hope is a term of endearment. Anyway, I love you all. I'll leave you with a bit of outro music. And until next time, take care from me. All the best. Cheers. Bye.
Stealth QE for the banks. Rates need to stay high. Changing the CPI data.